Hi, welcome to Solutions for Seniors. I'm Linda Pellerin, the Executive Director of the Shepherd Center of Charlotte. We're a nonprofit agency that uses senior adults or seniors to help other seniors, senior volunteers to help other seniors. And we have a variety of programs and services that do that. And this program is to help you understand, what's available out there for seniors in the Charlotte community. So I hope you enjoy it. Today's guests are, we have Jan Feltz with us from, she's the coordinator of the Tax Aid Program with AARP. And AARP and the Shepherd Center of Charlotte have partnered for a good many years with the Tax Aid Program, and so we welcome Jan.
Thank you.
Also with us is Bill Romeo. He is with American Prosperity Group and the Society for Financial Awareness. There we go. And they're both here to talk about taxes because, well, February is a time when people, at least begin to think about, getting their taxes done. And especially for seniors, we have the AARP Tax Aid Program, and we're going to talk a little bit about that. Tell us about that, Jan. What is involved with the Tax Aid Program?
The Tax Aid Program is a partnership between the AARP and the IRS to provide free tax return preparation service and free e-filing for low to moderate income people and seniors. Everything we do is free. Everybody that works for us is volunteer, and our goal is to keep people from having to pay for getting their tax return prepared when they don't have to.
Right. Now, we've got some changes going on this year. For many, many years, the Tax Aid Program has been held at Myers Park Baptist Church.
Right.
And the church, actually, the facilities didn't quite meet the standards of AARP in the last couple of years in that, we like to do the e-filing, and right. They didn't really have the wiring and the technology to do that. And so this year we've moved it. Tell us a little bit about what we're doing this year.
We are moving. We are going to be located at Southminster Retirement Center. That's 8919 Park Road, and that is right across the street from South Meck High School. Okay,
and I'm hoping that you can tell a little bit about the procedure now. If a senior wants to come to Southminster to get their taxes done, first of all, they need to call the Shepherd Center and set up an appointment. That's the part that we do, is we set up the appointments and everything. But then what do they do? Where do they go?
Well, we will hopefully have instructions with the Shepherd Center when they call on how to get there. We have a lot of signage. It's a very, very large place. We're going to have a lot of directional information once you get there. The most important thing is to call the Shepherd Center and make the appointment, and we will be able to handle it from there.
Okay, now, and I know at Southminster, and anyone who has been to Southminster will know that there is they renovated a couple years ago, and the entrance is different than it used to be. Right. But seniors aren't going to have to go through that entrance, are they?
No, we're going to have a side entrance. So they park at the church, which is right next door to Southminster. I'm going to have signage in the parking lot. Our door is directly across from the parking lot, so it'll actually be very easy. They have visitor spaces at Southminster, but very, very few, and they are very far from the door that people will need to go into. So the church parking lot is going to be the answer to that.
Okay, and the church is Quail Hollow Presbyterian, right? And that is, it's right beside Southminster. Right. And there are some stairs that the seniors will have to go down.
One set of stairs down. There's about 6 steps there.
Right, and but they could be dropped off too.
You can absolutely be dropped off at the main entrance, and if you have a wheelchair or you just can't actually make it down the steps, and that will be an easy transition.
Okay, and I know that the Shepherd Center will have some volunteers there too to help guide people.
Yes.
Okay, so they get to Southminster and they sit down with one of the volunteer tax preparers. Right. They explain the procedure a little bit.
Well, most of our people that have been to Myers Park Baptist in prior years have been coming for a long time. We really have pretty educated people about what the process is. They need identification, a social security card, driver's license, last year's tax return, all the tax documents that you get in the mail, all during the month of January. And then you sit down with the preparer and just go through your situation. We input it into the computer. We're online this year with our software. We e-file it. You take a copy home and you never have to think about it again. You don't have to mail anything. You don't have to do anything. It's all very concise.
Now, what if a senior or you know, what if the tax return is a little bit more complicated? Can the volunteers still handle that, or are the seniors referred, or whoever comes in to get their taxes done, are they referred somewhere else?
You know, we very, very rarely refer somebody out. We have quite a few seniors with lots of investments, that kind of thing. We handle just about, we have several things that are out of scope, but primarily business items. We don't have a whole lot of things that we can't handle, and I can't remember sending people away maybe once or twice since I've been doing this for 5 years.
Okay, now let's talk about the tax preparers for a minute. They're volunteers.
They are.
Now, what if there's someone in the community that would like to volunteer and do these taxes through AARP? What should they do?
You can go to the AARP website and type in tax aid in the search line. You can find out a lot of things about our program that way, primarily where our sites are, what the contact person is for our area, and that would be the thing to do if you're interested in volunteering, is get the contact person in our area and contact them.
And then what happens? Is there any kind of a training? I imagine.
Oh my gosh, yes. It's January seems to be training month. We have to be recertified by the IRS every year with a written test, and so we have 3 training sessions in January that go over all the material. There's a Link and Learn website that the IRS has. You can do it self-study if you want to, but you take the test before you can prepare anybody's return, and we all take it every year. So the training is quite
extensive.
Quite extensive, right.
Well, now it's already February, so if someone wanted to do this, would it be too late for them if they wanted to be a tax preparer?
It would be. It would be. We start in December with our orientations, and then, as I said, the training is during January. You have to have your test completed by the time it starts at February 1st, so it would be a good idea to just kind of look to next year if somebody were interested at this point in time.
Okay, great. Now, what is the AARP website?
It's aarp.org.
Okay, and is there a phone number, or is it better if they...
There is a phone number on the website. If you go to the tax aid in the search line, it will give you all the sites. I mean, you put your zip code in, it will give you the sites nearest you and tell you, for instance, for our site, you call the Shepherd Center for an appointment. Every site has its own unique phone number because they all have different partnerships. So that the AARP website is the best source to find out where it's being done and how you make an appointment.
Okay, now let's go to the other side, and I don't know if it's going to be too late for people, but you know, what should people do to make sure that maybe they're not having to pay some taxes on some of their investments or something? Bill, you're the expert on that, so can you talk a little bit about that?
Yeah, well, there's 2 things you can't escape in life, right? And that's death and taxes. And so when it comes to taxes, I think nowadays most folks are trying to minimize their tax burden. And how best to do that? What are the best vehicles to do that? Well, I think first of all, for most seniors, they have some tax-deferred investments, and that's usually the norm. And the most that we can do to maximize those tax-deferred investments, the better we are, because we're not paying tax on the gains in those investments until the money comes out. I think ideally for anyone who's in their 50s, 50 to 55 range, want to consider, you know, doing a Roth IRA, where the money that goes in can grow tax deferred, and then there's no taxes on that money when it's pulled out after meeting some criteria for income. And so that's wonderful to have some sort of tax-free income, is I think what people are leaning towards. I'm going to mention something now which really goes against the grain from some folks, but we are big fans of cash value life insurance. You know, the rules on cash value life insurance have not changed since they were put together back in the early 20s. And that is cash value life insurance that has a cash value portion, grows tax deferred, and it comes out tax free when you're ready to use it. And so there are many, many different scenarios on how this can be used. But I think moving forward, we're going to see a bigger push for some tax-free type income distributions from investments than we ever have because of these ever-changing tax rates.
Now, is it too late for seniors to do this kind of life insurance?
Well, it depends. And that's my standard CPA answer, right? It depends. It depends on where they are, how old they are, where they are in their health, whether they can qualify to do this. We have to take a look and an evaluation as to what they have now, where they're trying to be, and then find the best company that's out there that could get them what they need. See, the thing is, we all feel that insurance is too expensive, and to do something like this might be disadvantageous. However, we're living longer, America, and as we live longer, to our advantage, the mortality tables for life insurance are increasing. I did a policy for someone the other day. They were 60 years old. The illustration went out to age 112. When you look at the Today Show in the morning, you'll watch Willard Scott say happy birthday to all those people who are over 100. And how many are 105, 113? We saw one the other day. And it's going to be that you're going to see this country have an increasing population of people over 90 and, of course, into their hundreds. As a result, the rates for life insurance are getting cheaper. So it never, never hurts to do a life insurance evaluation each year.
Okay, now you brought up insurance, so I'm going to ask you this question because I'm still a little vague on all this myself. But long-term care insurance, a lot of seniors are looking at that, and some of them are finding out that they can't get it because of their health or because maybe they're too old or whatever. What is the ideal age for someone to really look at long-term care insurance?
Okay, do we have enough time? Okay. I'm going to tell you
In a nutshell.
In a nutshell. I'm going to try to talk about 2 points. Number one, what's the best age to look at long-term care insurance? Right now, I'm saying 50, 55. That's the primary great age because your health is still pretty good, God willing, and of course the premiums are cheaper. However, with us living longer, you might as well look at it into your 60s, 65, and see if the portfolio can handle the premium payment on an insurance policy at that age. But because America is living longer, and there's a greater need nowadays for long-term care as we age, right, we're seeing hybrid type policies come out in the industry, whereas here's mom or dad that maybe had a $25,000 or a $50,000 CD sitting in the bank, and when you ask them what they're going to use it for, they say, well, I want to give this to my kids when I die. I want them to have something. What we say is, why don't you take that $25,000 or $50,000 CD and give it to a life insurance company who has a hybrid annuity / long-term care type product. Let me give you this example. The $50,000 goes into a fixed annuity earning, let's say, 3% per year, and it just keeps earning 3% until one of two things happens. If they pass, well, now the kids get the $50,000 CD plus all that tax-deferred interest, which is better than a CD, right, in a bank. And or if they need long-term care, that $50,000 CD turns into $150,000 of long-term care benefit. Triple. And that's the kind of products we're seeing out there which are more advantageous to some folks who don't want to write a premium check every year. Leverage an asset that's sitting on the sideline. If you need it, you have it. If you don't, it goes to your kids. You didn't lose. And if you don't buy long-term care at all or think about it, the family loses. Because where's that money going to come from? It comes from the estate, and anything you wanted to give your kids could be wiped away.
Right. So what do you recommend? I mean, long-term care is something I know a lot of seniors are struggling with this now because the seniors who are in the sandwich generation where, you know, they've got the elderly parents that are in their 80s who have no long-term care insurance, and that's what makes the sandwich generation start looking at this going, wait a minute, maybe I need to get this because, you know, I don't want my children, and, you know, and what if I think every 60-year-old out there is thinking they're going to be, well, they'll survive Willard Scott, I'm sure, but they want to be the one on the Today Show that's having their birthday announced and everything.
I think we all do, yeah, we all do, and no one wants to think that it's going to happen to them. If you survey folks out in the street, 70% of those people surveyed says it'll never happen to me. Okay, and I don't know if my mother's going to watch this show, but she says the same thing to me all the time. It's never going to happen to me. I'm going to die in my sleep like Grandma Crocione did many, many years ago. She went for a nap and she never woke up. I wish that happens to everybody. But sometimes it doesn't, because there's two ways to die, the slow way and the fast way. And we don't have a choice. So if we don't protect against the slow way, then we're going to be in trouble. Now, we see our parents aging into that need, and we say, boy, I hope I don't do this to my kids. Or I know mom didn't plan for this to happen. I don't know if this is going to happen to me. Try to find some way to plan with an advisor, with someone you trust, that could actually say, okay, let's earmark some dollars from this portfolio, either set it on the side for the just in case or leverage it with an insurance. And if it's cost prohibitive, well, then we have to sit down and make that decision. What are we trying to insure against? If we don't have a lot in our portfolio, I don't think there's any disgrace with saying, you know what, let the chips fall where they may. There's programs out there that we can take advantage of, which is why they were put into place. But if we were well off and well-to-do, and we never planned for it because we just wanted to put it out of our mind, and then it happened, boy, what a disgrace, right? And here we know we have to liquidate our assets where we were at once wealthy and maybe now we're poor. I think that's more of a disgrace for a family than it is if we just started on the bottom rung.
Now, what about couples? Does a married couple have to, each of them have to have, if we're talking long-term care insurance, each of them has to have their own policy? Because if they only have one and one of them uses it all, then the other one doesn't have anything, right?
There's many ways to go about it. What we like to look at are what we call shared policies. You can have two individual policies, a certain amount of benefits for each. However, if we die and never use it, all that money seems to be wasted, and that's what people don't like about long-term care. But we can find these pooled policies, these shared policies, where there's a larger benefit, and if one person needs so much, they use it, and if they pass away, there's some left over for the remaining spouse. Or if one person uses it all, so be it, but at least it was enough to cover that need for the estate. Okay, and then of course the remaining spouse has to deal with what they have. But there's many different ways to slice the cake. There's the individual, the shared, and then of course these hybrid policies that use annuities or even life insurance to help offset the cost.
Okay, now long-term care insurance policies, what about taxes on that? I mean, is that just like over in a thing, you don't have to worry about it until what? Until you're using it, or you never have to worry about it?
Yeah, long-term care policies, straight out long-term care insurance, the distributions from that are tax-free. So we don't have to worry about being taxed on any of the distributions for, as long as it's used for care, which they wouldn't pay out unless there was a care need. Where I get a lot of questions are, what if I use an annuity type product, which then has a long-term care benefit tied to it? So now I need the long-term care and it's paying me back more than what I paid in, all right? Is that taxable? And the answer is yes, but it depends, or no, but it depends. As long as it covers the cost of care, it's non-taxable. But once it exceeds, the payout exceeds what the cost of care is, then we have a problem with that overage of being taxable as income. So most of the times it never runs into that. But just make sure that people know that and that advisors explain that to them and their families.
Now let's talk about advisors for a minute. Seniors are very cautious. And they don't, a lot of times they don't seek an advisor because they're afraid if they do, it's going to obligate them for something with that particular advisor. Is there some place that seniors can go where it's free, there's no obligation, they can just go for a consultation?
Yeah, there is. And I hate to say, though, that there are people that feel that way, and they'll put off doing something good for themselves just for the fear of possibly having this obligation to meet with someone. I want to tell everyone who's watching this show, put that out of your mind, because you're doing yourself a disservice by not going to get some information, by not talking to someone. First, go with someone you trust, okay? Second, I'd say definitely call the Shepherd Center, because look at the Shepherd Center list of programs. You have tons of wonderful financial seminars and programs where people can be in a non-threatening atmosphere, learning, and then of course they can have a sidebar conversation with the seminar consultant at the end. It's wonderful. The Society for Financial Awareness that we belong to puts on throughout the Charlotte and Mecklenburg and Union County areas tons of free seminars to companies and organizations and churches, and can come in and can do this pro bono just to kind of get the information out there, because the Society for Financial Awareness's motto is to eliminate financial illiteracy. The worst thing we can do is just not know. So there are opportunities to do that. Most financial advisors will sit down with you and have a free consultation, and as long as you know up front that there's no cost to talk, and that there's no obligation when it's done. Go in there and get the information. Okay, swallow your pride. Go in there. Don't be afraid.
Okay, for the SOFA website, what is that?
The SOFA website is www.sofausa.org. And if you go on there, you can search for a local SOFA member in your area. You can search my last name, Romeo, in the Charlotte Matthews area, and you can see our SOFA website.
And I appreciate you talking about our seminars because we have a lot of them. Many of them in this quarter are lunch and learns. So not only do the seniors get to come out and get some wonderful information, but they get a free lunch too.
Oh,
so,
yeah,
and
great.
you know, and all of that is free. And I should also mention that Bill is a member of our board of directors too. So we are always looking to him for information about finances and things like that. He's trying to keep the Shepherd Center straight with the finances. So, Jan, getting back to the tax program, now how far in advance should the people call the Shepherd Center to make an appointment? You know, they probably should be calling now since we're already doing the
Right.
the tax returns and everything.
Right. You can call the Shepherd Center anytime after January 15th, which obviously is where we are now. And we make the appointments. Our site is open 2 days a week, Tuesday, Thursday, from 10 till 2. And the Shepherd Center makes all those appointments, keeps records of your phone number, that kind of thing, and we make them through April 15th. So just get the phone number down and call Shepherd Center and get your appointment, and we'll get your return done.
And I know that phone number. It's 704-365-1995. So make sure you write that down, and we'll probably have that scrolling across the bottom, and eventually. Anyway, and Bill, is there anything that you would like to say to seniors, specifically? I know you sit down with a lot of seniors and you talk to them. What are their concerns now?
I think the biggest concern we hear at the table, which reiterates what happened in 2001 and then again in 2008, is am I going to outlive my money? Mm-hmm. And what will be my standard of living in 10, 20, 30 years as I age? So that's the biggest concern. So I think to sit down with someone who specializes in maximizing retirement income, being one who's able to provide lifetime streams of income from what they have, everyone needs to have some portion of their portfolio that can do that can help create that pension. Because who knows about Social Security in the next 10, 20 years? And of course, our investments, we got to hold on to them. And I think most folks are not willing to be more risky in the markets nowadays after what has happened before. So with that, we have inflation. And we have to be positioned to kind of overcome that also. So that's what I hear a lot, how to maximize income and preserve and protect and perpetuate my wealth to the next generation.
And for, there's a lot of 50-year-olds, 55-year-olds who are still in the workplace, and they maybe have retirement plans with their with but then there's a lot of them who had an employer but now who are unemployed. Mm-hmm. And they don't know what to do with their former retirement plans or whatever. Should they be sitting down with an advisor? I mean, should that just be sitting wherever it sits? You can tell I'm so well versed in all of this. But should that be sitting there in some account, or should they be trying to move that, or are they even allowed to?
Yeah, this is where it's not all right to just ask your brother-in-law, sister, cousin about what to do with your 401k.
But they're such authorities.
I know they are. What we have at that age, 50, 55, and we see more and more people getting laid off, is that there's the hardship. And if no income's coming into the family, there might be an opportunity at age 55 to take a hardship withdrawal from a 401k and minimize some IRS penalties. So you need to sit down with an advisor who knows these rules and can evaluate the portfolio to see what's best for that. Maybe a rollover is. Maybe just keeping it there is. And we need to evaluate both ends.
Okay. Yeah. All right, let's go over the websites again for the AARP.
AARP.org.
Real easy, real
And
easy.
Tax aid in the search line will get you all the information about our program.
Okay, or you can call the Shepherd Center for your appointment, which is 704-365-1995. And Bill, for the Society for Financial
The Society for Financial Awareness.
I got it this
Yep.
time.
The website is sofausa.org, and the phone number would be 704-708-5001.
Okay, and then if you wanted to have like a free consultation with Bill, just type in Romeo. It's really hard to forget that name. Type in Romeo, and you can do that. Thank you so much for coming here today and enlightening the seniors on taxes and insurance and all sorts of stuff. And the Shepherd Center of Charlotte, of course, is very happy that you could come to this show. Our guests next month are going to be Adele Mahan. She is with Fresh Start Transitions, and Brian Carney, who is with Silver Cross. They're going to talk about safety in the home. And they both deal with going into seniors' homes and making sure that they are outfitted to accommodate some of the health issues and mobility issues that some seniors have. And of course, the Shepherd Center is all about keeping seniors in their homes for as long as possible. And we've been working with seniors we're in our 31st year, so we kind of know what we're doing with that. So if you want to know more about our programs and services with the Shepherd Center, please visit our website, www.shepherdscharlotte.org, or you can give us a call, 704-365-1995. And hopefully we're going to have this this monthly show for you every month, and talk about being a little redundant. And so, in the months ahead, we're going to be talking to a lot of people who work in the senior community or who have programs in the senior community that are going to be of interest to you. So we really look forward to you, tuning in. If you see this program and you want to refer it to someone else, we are going to have it posted on our website. And so that will be a really good way for you to view the program again and to pass it along to friends and family. So, so we're really excited about this and look forward to seeing you next time. So again, the Shepherd Center website, www.shepherdscharlotte.org, or our phone number, 704-365-1995. Thank you for joining us. We will see you next month. I'm Linda Pellerin, the Executive Director of the Shepherd Center. Thank you.